This is the weekly review for the week of May 16th to May 20th, as well as this week's Sunday preparation. So, coming into the week on Monday, I had a bullish bias because I was bearish for the week and I was expecting the high of the week to form inside this daily fair value gap here, and then for price to roll over and take the 2017 low. And Price gave us in New York session on Monday a mentorship setup, but the reason I didn't take this is simply because we didn't have an M5 fair value gap, nor did we have a SMT created with the London high raid here. However, in hindsight, this fractal and price turned out to be extremely clean, and we actually ended up having three of these same fractals this week on Monday, Wednesday, and Friday, where price would raid London high and then target London low, give us nice displacement off of the raid, and then create an institutional order flow entry drill before taking London low. So here again, the displacement was nice, but there was no M5, M15 fair value gap, only an M3 fair value gap, and we also violated this breaker here. But this institutional order flow entry drill was nice with this M15 very strong break in market structure here, creating the fair value gap to retrace up into and then take the London low. I did, note all of this in my journal in terms of gathering statistics about where you could place your stop, whether it be above the rate high or the M15 or the FVG high rather, and how many times it creates this institutional order flow entry drill before targeting the draw on liquidity. But we ended up now rating the London low here, creating an SMT, and then creating a bullish mentorship setup, but this was outside of session here after London. And we didn't actually even end up retracing into the fair value gap, only the breaker. So that was Monday. Going into Tuesday, there was nothing in New York on Tuesday, really just London, and the interim session rallied up, and this is 7 a.m. New York, and we literally just consolidated. There was Fed news here. Chairman Powell was speaking, but that literally didn't do anything for price. The thing that's important that happened on Tuesday, which I missed live, was that we had a daily break of the fair value gap high. So initially I was just looking for price to come into this fair value gap and then roll over, but we had this clear displacement above, closing above the fair value gap high and coming into premium of this daily range from this swing high to this swing low. So this should have put me on bullish alert for the week, and that's actually what tripped me up on Friday in terms of taking a losing trade. On Thursday for taking a losing trade. But it'll make more sense when I get to that. So on Wednesday, from my bearish bias perspective during the week, was very clean because now we started having this displacement away after, because I was thinking the high of the week was going to be created on Tuesday or Wednesday. And it was really nice on GU where this is Tuesday, right? We rated these equal highs into this high time frame PD array confluence, H4 fair value gap, daily order block, beautiful displacement away from it. So this on GU, I was thinking this is the high of the week here, and we're just going to continue rolling over. But there was no setup for GU. That's why I set limits for the one on EU. But I did not get a fill. So here again, we have the same fractal rating London high, SMT, displacement, targeting London low. I simply put my limit at this second fair value gap for the better RR because I'm putting, again, my stop above the rate high now for the true invalidation. But here we can see that price didn't take the fair value gap high here. So you could have safely placed your stop here, but I'm still gathering statistics on that. But again, here we come down, don't take London low, retrace back into this fair value gap that we have displacement breaking market structure of the low-hanging fruit. Price comes back for the institutional order flow entry drill and then takes London low and then continues rolling over. So going into Thursday, I still had that bearish bias because we had that, again, that displacement after Tuesday, and then we had this nice bearish mentorship setup. So on Thursday, I was looking for shorts. But in hindsight, just looking back on Thursday, all this, this was the short here on Wednesday I was just talking about. All of this was just a retracement into H4 fair value gap here and discount of this price swing up here. So 50% as discount. So all of this, again, was just a retracement. And we should be expecting price to go higher because on Tuesday, we had that violation of this daily fair value gap, closing above it, right? And we have this kind of confluence of equal highs here for Euro. So Thursday completely messed me up because I took a short on Thursday. Looking back at it, this right here was simply the Judas swing of the day. Now, we did not have a SMT with the Asia low raid. I think if we did have an SMT here, that would have made me extremely cautious of taking shorts. Because I remember I was looking at this, yeah, we had the H1 break in market structure, Asia low raid into a H4 fair value gap. But I was still leaning bearish. But I believe if we had an SMT here, that would have completely changed my perspective. But now looking at this, we have this big displacement up, creating that H1 break in market structure. And we have relatively equal highs here from yesterday. And at the same time, on DXY, on Thursday here, we have these relative equal lows. This one right here and this one right here. So I identified that as the draw on liquidity on Thursday. But the thing was this, I was expecting DXY to trade below them and then reverse. The same way I was expecting EU to trade above these relative equal highs in reverse. Now, I think that perspective was wrong because that means I was anticipating a reversal, where the much easier trade would have simply been a trade to the draw on liquidity. So if I thought DXY was drawing down to these equal lows and Euro was drawing up to these equal highs, the much more logical and safer trade would have been this institutional order flow entry drill after we had this big displacement up, right? Price just comes down, hits 25% almost perfectly of this M15 fair value gap, and then runs up to the highs. So based on the draw on liquidity, I believe this is the trade that I should have taken, and it would have been much more logical and lower risk than expecting price to retrace above the equal highs, because we don't know whether it's going to retrace or not. And the trade that I ended up taking was actually an M3 trade. I don't even know why I honestly took this. I didn't think it was going to work out anyway. So yeah, just my mental on Thursday was not very good. Basically, we had a high time frame SMT here. We didn't even have a raid, really. It was just the fact that we were above these equal highs, and then I saw this displacement down, and I got in on this fair value gap. I don't know what the fuck I was doing, honestly. So that's why I took a loss on Thursday. But I do understand now why this long would make sense. Anything else above here, yes, we ended up retracing into fair value gaps here and stuff like that, but that's beyond the draw on liquidity. right? We already took these equal lows on DXY. So we don't know if this is going to continue running up or reversing. So this would have been the low risk trade for me to take on Thursday. Now on Friday, I did end up recouping those losses because we had an absolutely beautiful trade on Friday, simply from the week. So the weekly opening price is all the way down here, right? Basically around, oh no, I already have it marked actually. I didn't even see that. So yeah, the weekly opening price is all the way here. We made the high of the week, or potentially the high of the week, on Thursday, right? So we are very far away from the weekly opening price. So just based on the weekly candle power 3, we should expect price to give some sort of retracement down to form the close of the weekly candle. And we ended up forming this short-term price range, right? Price made the high on Thursday, then made this low. That's external range liquidity. And then just like we had on Monday and on Wednesday, price comes up, raids London high with a SMT, displacement down, and then here is your mentorship entry into this M15 fair value gap that also has confluence with the breaker. So this was really nice that we had the fair value gap and breaker confluence. Then price again comes down. We break market structure here. That was an M15 break in market structure down here. We form this, again, fair value gap, institutional order flow entry drill, and then price rolls over and takes London low. So Friday was a very, very beautiful setup in terms of all the confluences being there. The only thing for Friday is that I entered based on this M5 fair value gap here, and I placed my stop above the M5 fair value gap high when we also had a M15 fair value gap whose high was all the way up here. So I don't know if I just got lucky in that price didn't end up, retracing higher, because it could have easily, come up here, not taken the M15 fair value gap high, and then retrace lower. So yeah, that's just one thing to note. But in terms of the structure and the fractal of the day, it was extremely clean. And again, we had those same 3 fractal setups 3 times this week. Now, going into next week, I don't really have too much of a bias on Euro. What I'm thinking is that price could potentially be retracing into this weekly fair value gap here, which is also in premium of the weekly range from this swing high to this swing low. And similarly on the dollar index, we have this weekly fair value gap that it could retrace down into and then turn and go higher. So I think what price does next week, if we come into here, is going to determine what the bias is going to be for Euro long term. Because if we come in here and have really big displacement on the weekly candle and close above this weekly fair value gap, I think that could be potentially a sign that Euro is forming a bottom, because we also have a high time frame SMT here where DXY took the 2017 highs and Euro did not take the 2017 low. So if we can have a big displacement up here and close above the weekly fair value gap, I think that's going to be bullish for Euro. But in terms of the short term, I think what I'm going to be expecting is just to see price come up here into the weekly fair value gap and also premium of the weekly range, form some type of high and then reverse. But I don't know exactly how we're going to get there. I'm not seeing anything below price right now, so I'm just going to wait for Monday open and see what happens. But yeah, that's my bias on EU. And just quickly for NASDAQ, I really wasn't paying too much attention to NASDAQ this week. The only thing that I'm waiting for on NASDAQ is to see if we have some type of displacement up here, breaking market structure, and see if we can have an actual market maker buy model here. Um, I was thinking that this was going to be the low and we are going to break market structure here, but we ended up rolling over and rating this again. So really, it's just a matter for waiting to see if we break market structure on the daily to give us confirmation that we're going to end up running these sets of equal highs here.